Breakout Chart Patterns. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And in this video, we are going to discuss about some chart patterns that are like really powerful and are used by most of the traders in the stock market, and they are making money out of it. And today I am going to teach you about these chart patterns that specially indicate breakout on the chart, and that is why I call them as the breakout patterns, the breakout chart patterns. And if you understand and use them properly, they can make you a lot of money as well. And so, if you are a trader and you want to level up your skills in trading and technical analysis, make sure that you're watching this video till the end. And one more thing, if you find anything valuable, anything that can add value to your trading, make sure that you subscribe to this channel and press the notification bell. Alright, now let's start with this video and let us first understand what do you mean by chart patterns. You see, the chart patterns are basically the formation that are made by the price that gives us a certain indication in the market. That's right. By analyzing the chart patterns, we get to know that whether the market is bullish, bearish, is giving a breakout or maybe taking a reversal. We get a basic scenario of the price movement by analyzing the chart patterns. So the first breakout pattern that we have is the cup and handle pattern. You see, this pattern usually starts in a sideways market where the price is taking a resistance, and along with that it forms a rounding bottom which is called as the cup. Because you see, this shape resembles like a cup. And after the cup, the price forms another rounding bottom which is called as the handle. And that is where you exactly get your pattern which is called as the cup and handle. So you know, in the area where the cup is formed, the price gets a lot of buying pressure. And so when the price comes near the resistance, it quickly manages to break it. Because the buying pressure which is gathered in the consolidation overpowers the selling pressure at the resistance. So on this pattern, we will buy when the stock gives a breakout. And then we will place a stop loss below the previous low. That's right, and this is like a very small risk trade. And the target will be same as the size of the cup. So that you can see, that's the total area of the cup. And at the same distance above, we will place our target. So here you can see that we can make out at least 1:4 or 1:5 risk to reward ratio in this trade, which is like a very excellent trade if you manage it properly. Alright, so the next pattern that we have is this symmetrical triangle pattern. And in this pattern, we use two types of trend line. The first trend line connects the swing high that is formed by the price and basically acts as the resistance. The another trend line connects the swing lows and act as support for the price. And here you can see that the price is continuously forming a pattern of lower top and higher bottom, which is like very strange. And you know, this simply means that the number of buyers and sellers in that stock are increasing simultaneously. And so the volatility in the market at the same time reduces. And on whichever side the price gives a breakout, we will take a trade on that side. Like if the stock breaks on the resistance, then we will buy. And if the stock breaks from the support, we will sell. So over here you can see that the price actually broke from the resistance. So we will simply place the buy order. And our stop loss will be below the previous low. So this is again a small risk and huge return trade. And one thing let me tell you about this pattern is that you don't have to anticipate where the price will go. It's like we don't have to predict the price movement, we just have to act on it. Alright, so the third chart pattern that we have is the ascending triangle pattern. Now in this pattern, the price is taking a resistance at a level and a support on the trend line as you can see on the screen. Now one thing to notice about this pattern is that on the trend line, the price is getting a buying pressure which is higher than the previous one. That means that there are small bullish buildups that are happening in the stock. There are people who are willing to buy the stock even at the higher price. But since there is a huge resistance which imparts like a lot of selling pressure, the price fails to break it. However, with successive buildups and buying pressure, the price manages to break the resistance. And exactly when this happens, we will buy the stock on the breakout. And like we know that we have to place the stop loss below the previous low. So in 90% of the cases where you get a ascending triangle pattern, the breakout will happen from the resistance. That means if the price breaks the trend line, we will ignore that stock. We can't take a short position over there. Okay, now let's look at the last pattern that I'm going to teach you in this video. That is the descending triangle pattern. So in this pattern, the price actually takes a support at a level and resistance on a trend line. And since the trend line is falling, it is called as the descending triangle pattern. And this pattern is completely opposite to the previous pattern that we learned, which was ascending triangle pattern. In this pattern, when the price takes resistance on the trend line, it imparts a selling pressure in the price. So it is like whenever the price comes near the trend line, people are willing to sell the stock even at the lower prices. So this is like a bearish buildup happens in the price. But the buying pressure near the support is too strong for those buildups to break it. But however, after successive buildups and selling pressure, the price manages to break the support. And exactly when the price breaks it, we will sell the stock and we will place the stop loss below the previous high. So up till now it was like we were placing the stop loss below the previous low. But in this case, since we are taking a short trade, we will place the stop loss below the previous high. So in case if we go wrong, in case if the stock turns from here and shows some bullish movement, we will exit with a very small loss. Alright, so these were the 4 patterns that we learned in this video. Right from cup and handle, symmetrical triangle, ascending triangle up till the descending triangle pattern. You can maybe note this down or quickly take a screenshot of it. So make sure that you use this pattern on the chart. Take proper trade as I have told in this video with proper stop loss. Do proper risk management, trade management, and then you can also make money just like the professional traders. You don't just have to rely for somebody who is giving you tips for trading. You can do your own analysis, you can do your own research in the stock market and make money. And that is what our channel Tradingfyive ensures you. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible and to not miss such many content on the stock market and technical analysis. Make sure that you subscribe to this channel and press the notification bell. Alright, and I will see you in the next video.